Okay, think about the last thing you bought online. Pretty simple, right?
Yeah, happens all the time.
Now imagine that digital transaction, the money moving online. Imagine it being basically the same kind of thing as, I don't know, a stock trade or even the deed to your house.
It sounds a bit out there when you put it like that.
Right. But according to our source for this deep dive, Metallicus, that's actually where things are heading. It's not science fiction. So we're here today to unpack two really big ideas from them. First, there will be no separation between the digital economy and the real economy. They will become one and the same.
That's a powerful statement.
And the second one, crypto is the capital structure of the future.
Also very bold.
Exactly. So our mission really is to try and get our heads around this huge shift. What does it actually mean? And, explore how crypto fits into reshaping, well, pretty much everything.
Yeah, and it's interesting because I think most of us, we still kind of mentally silo these things off, don't we? Like, there's the online stuff and then there's the real economy.
Yeah.
But the argument here is strong. Almost every part of economic activity is getting digitized bit by bit, or sometimes in huge leaps. It's way beyond just having an online store now.
Okay, so when we talk about these lines blurring, it's not just like more businesses getting websites. That's not it, is it?
No, not at all.
The source is talking about something deeper, right? A completely digitized, interconnected, data-driven economy. What does that actually look like beyond just buying stuff online?
Well, think about what they call digital-first businesses. E-commerce is the easy one, sure. But look at fintech. All these companies completely rethinking banking, payments, investing entirely online.
Right.
Or AI services. They're embedded in logistics, healthcare diagnostics, everywhere. Their whole value chain, their core offering, it is digital. There's often no major physical thing behind it.
And that must impact jobs too, surely. The source mentions automation, AI making human work more digital as well.
Oh, absolutely. That's a massive part of it. Think about how many people work remotely now using cloud tools, or how algorithms are increasingly making decisions in, hiring, loan applications, supply chains. The act of working, of producing value, is itself becoming digital native for many.
And then there's this idea of data as currency.
Yeah.
It sounds a bit dramatic, but it feels true. It's not just info anymore, it's a core asset.
It really is. What's key here is that the ability to gather data, analyze it, and then act on it. That's become maybe the main competitive advantage for so many big players.
How so?
Well, it drives everything from predicting what you might buy next to making manufacturing super efficient. It's like the raw material of the modern economy, in a way.
Looking ahead, the source talks about digital identity and ownership. Verifiable credentials, tokenized assets, like digital versions of property deeds or music rights. How does that fit in?
Okay, yeah, this is where it gets really interesting, I think. Imagine having one secure digital ID that works everywhere, proving who you are, what you own, what you're credentialed for.
Streamlines things a lot.
Massively. And then tokenization representing real-world stuff like art, property, maybe even your reputation, as digital tokens on a blockchain.
What does that actually do?
It could unlock so much.
Right.
Think fractional ownership. You could buy a tiny piece of a skyscraper or a famous painting. It makes markets more liquid, more accessible. It could genuinely change how we invest and own things. Lower barriers to entry,
And the fact that this digital world is global by design, that feels crucial too, doesn't it? No borders online.
Exactly. The internet just is global. So creators, entrepreneurs, they can reach a worldwide audience from day one. That used to be incredibly hard and expensive.
Right.
So, as the source puts it, as more stuff moves online, and new businesses are just born digital.
Yeah.
The digital economy isn't just running alongside the old one anymore. It's becoming the main way we exchange value. It is the economy.
Okay. Got it. So, digital is becoming the main stage. Let's shift to that second big idea then. Crypto is the capital structure of the future. Wow. That's a lot to unpack. What's the core argument?
The fundamental idea is that these cryptographic technologies, decentralized systems like blockchains, they offer a whole new foundation, a new set of rails maybe for handling value, ownership, finance, all the stuff that makes an economy work, especially in this digital first world we were just talking about.
Okay, let's break that down. Tokens as equity and incentives. How's that different from just buying shares in Apple?
Well, it can be similar in some ways, but often it's more direct, more dynamic. Think about Web3 projects or DAOs, these decentralized autonomous organizations.
Right, the internet community is running things.
Exactly. Tokens in those systems often give you more than just a slice of ownership. They might give you voting power on decisions, a share of the revenue the system generates, or specific rights to use the platform. It's often more integrated and potentially easier to trade.
Interesting. And programmable money.
Yeah.
That definitely sounds futuristic. What does that mean practically?
Yeah, it does sound a bit sci-fi. But it's really about smart contracts. These are bits of code living on a blockchain that can execute automatically when certain conditions are met.
So like code that is the agreement.
Precisely. You can embed rules directly into the money or the asset itself. Imagine a token that automatically pays out dividends every month, or an asset that transfers ownership automatically once a loan is fully repaid.
Ah, okay. So it takes intermediaries out of executing the logic.
Exactly. It automates financial agreements in a way that's transparent and doesn't rely on trusting a middleman to do it correctly, like setting up super specific, unchangeable automatic payments.
And that ties into DeFi, right? Decentralized finance, where people are doing lending, borrowing, trading, but on blockchains.
Spot on. DeFi is basically trying to rebuild traditional financial services, lending, insurance, exchanges, but using those smart contracts on open blockchains. The goal is often to make it more accessible, more transparent, and less reliant on banks or brokers.
And the source mentioned immutable cap tables on the blockchain. I get that conceptually a permanent, unchangeable record of who owns what. That seems useful.
Oh, incredibly useful. Think about traditional share registries. It can be complex, sometimes opaque, lots of admin, potential for errors.
Right.
A blockchain cap table is ideally a single, transparent, easily auditable source of truth for ownership. Cuts down on fraud potential, paperwork, all that friction.
And the last piece here, global access to capital. Using token sales, crypto crowdfunding, bypassing the usual VCs and banks.
Yeah, that's a really significant potential shift. Instead of needing connections or meeting stringent bank criteria, projects might be able to raise funds from a global pool of investors directly through token offerings.
Democratizing investment, potentially?
That's the hope, or at least one of the potential outcomes. It could lower barriers for entrepreneurs needing capital and also for smaller investors wanting to get in early on interesting projects. More participation.
It definitely seems clear from the source. And, I mean, Metallicus themselves are building a digital asset banking network using blockchain.
Yeah.
And they see crypto as way more than just Bitcoin or digital cash.
Absolutely. It's positioned as a foundational layer.
And that image on their site you mentioned, the laptop with a shopping cart, connecting to crypto symbols, linking to a secure phone profile, it really paints that picture of everything merging.
It does. It visualizes that seamless flow.
Yeah.
The argument basically is that legacy systems, traditional finance, they work, obviously, but they have inefficiencies. They have gatekeepers. Crypto, or rather these underlying blockchain technologies, they offer a potential alternative that's faster, maybe fairer in some ways, and definitely more programmable. An operating system for the digital economy.
Okay, so let's try and tie these two big threads together. We have the digital world becoming essentially the economy, not just part of it.
Right, the default setting.
And then we have crypto technologies providing the underlying infrastructure, the plumbing for value, ownership, finance within that new reality.
That's the core thesis, yes. It's not just a tech upgrade. It's potentially a fundamental rethinking of how economies work, how value is created and exchanged in the 21st century.
So just to recap for everyone listening, we've explored this idea of the digital economy basically becoming the economy, driven by things like digital-first businesses, data being a key asset, new forms of digital ID and ownership.
Yep, that's the first pillar.
And the second pillar is crypto potentially providing this new capital structure, decentralized, programmable, underpinning things like tokenized equity, DeFi, easier access to capital, more transparent ownership records.
That's the infrastructure layer argument.
It really leaves you thinking, doesn't it?
It does. And maybe the big question to leave everyone with is this. As this shift happens, and it seems to be accelerating, how are the traditional players, the big banks, governments, regulators,
Right.
how are they going to adapt?
Good question.
And maybe even more profoundly, what new opportunities, but also what new challenges does this kind of fully digital, crypto-enabled economy create for us as individuals and for society overall? It's a world where the lines we're used to are blurring fast, and figuring out what that means, that's good.